Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Apple report for Friday, March 31st, 2023. Before we walk through all the charts, just want to encourage you to please click like if you would each and every time you watch the Apple report and subscribe to the Wicked Stocks YouTube channel and check out wickedstocks.com where we offer a full assortment of video analysis like this, daily video analysis in the Triple Q and the SPY, two individual stock picks every week. Earlier this week, General Motors. On Thursday, we put out a very timely analysis in Intel, which is presently testing convergent channel resistance formations above the market, right at the market, actually pushing through it on one count. We may be on the edge of a significant buy signal in Intel semiconductor. If so, if that plays out Friday, with a settlement above this area, I'm looking for 2 to 3 months a bullish continuation in the order of about 30% price gain. Until then, Intel can fall off back to its low area from the last several months. So you may check that out. Subscribe just for that reason alone. It would be a great stock pick, stock trade. I outline the scenarios, the options you might buy if the signal does occur. For $47 a month, you get the full assortment: the Triple Q, the SPY, the two individual stock picks a week, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT. And if you don't like it, if after 3-4 days, by 5 days you don't like it, just shoot us an email and we'll reply and refund your money entirely. No questions asked. So here we are. Friday's daily Apple report. I like to start with the big picture, work our way in. We came off of long-term support in early January in the low to mid 120s at the time, mentioning how the 169.36 channel top should be considered in reach by some point in 23. About a month later, that was narrowed to within 3 to 5 months when we closed above this descending channel top that is presently at 138.03. We are well on our way. New high settlement following that January low occurred on Thursday. Let's narrow this a little bit and show you that we also, for the first time, cleared the 5/8 Fibonacci level, settled above it clearly, 160.49. 160.49, look to the far right here, remains the start of a range down to 158.52 that can now absorb selling through next week, and above which that long-term objective at 171.88, 3 to 5 month target above 138.03, is now in reach over the next few weeks. So that is the setup right now. If you, by the closing bell on Thursday, reach for those 170 out of the money calls that don't expire for at least a month, I'd go a couple of months out anyway on that, then that was the play. That is the play at hand. So if we can narrow this just a little bit, I'm going to show you how we've got 162.14 as intraday support. We settled just above that, and above which higher trade is anticipated. I'm looking for 164.26. Now, there are minor points scattered about. 164.26 is on the weekly chart. That is a September 22 high, a spike high. I don't put much weight on it in terms of the big picture, but for the day itself, it's a decent day trade level. So holding above 162.14, 164.26 in reach right about here, we could trade inside this zone for a good part of the day, assuming we open above 162.14. If we push through 164.26, especially early in the day, we just might reach this 166.61. What is this? This is like a 1 month channel top now. And so it's gaining importance. I've given it 2 stars. In other words, if we test it today, and I think it's likely over the next few days, but if we test 166.61 today, it can contain buying into later next week, and then we could fall back into the 158.94, 158.52, the 158.52 to 160.49 region within 3 to 5 days. So FYI, the 3 to 5 day swing trade has shifted positive as of yesterday's close, finally closing above that 160.49 5/8 Fibonacci. 3 to 5 day swing trade now anticipating 166.61, where profits can be taken, and you could consider playing the short side at 166.61 back into the 158.52 to 160.49 region within 3 to 5 days. But just know that we remain bullish on several counts: long term, mid term, and near term. Near term in my book is 2 to 3 weeks out. Short term is more like 3 to 5 days, day trading kind of thing. So the 2 to 3 week time frame is bullish. And if you fade 166.61, then you're a more aggressive trader, which is fine. You can fade this area, sell it, not only selling, liquidating a long position, but also playing the short side perhaps back into the low 160s. But just know, I don't see this today, but if over the next few days we do close above 166.61, any 3 to 5 day short position you set should be reversed. Then expecting this targeted 171.88 channel top within probably 3 to 5 days of closing above 166.61. That 171.88 channel top able to contain buying through the third quarter, possibly well into the year, into later year. We could fall off from here, and a settlement above 171.88 would be a significant long-term buy signal for Apple. Let's talk downside today. It's pretty simple. If we close today back below 158.52, this descending long-term two-thirds speed line, then I'm expecting the low 150s. You could call it the mid 150s perhaps, but 150.15 is our new rising one-third speed line. New because on Thursday we put out a new high. Every time you put out a new high, your speed lines get readjusted, recalibrated, reconstructed. 150.15. Now, if we push to a new high today, if we push through Thursday's 162.47 high, we reconstruct this rising one-third speed line. I call it a dynamic approach to trend identification. 150.15 is really the base of meaningful support down to, where are you? This channel bottom at 154.12. So this is becoming a wide zone. I will open this up if we fall back into this area in the coming days. So we would have to close below 158.52. This 157.81, by the way, no longer a valid pivot point. That should have been erased because we took out the high that it was based on. So the low of the high is a downward pivot point. We're now at a new high, so we're no longer even looking at this as a significant support level, but it is nonetheless just a minor point. So closing back below 158.52, we play the short side, the 3 to 5 day swing trade reverses. I don't think the 2 to 3 week position trade reverses, but we certainly could, within a couple of weeks of closing below 158.52, test this 150.15 rising one-third speed line, which can absorb selling through April, and we could push on to new highs from there. Just FYI, a little bit about speed line analysis, that the rising one-third speed line defines the bull trend. In other words, upward momentum remains intact above 150.15 following the January low, and above which the 171.88 level is likely, I'll say, by the end of May. That allows the market to fall back perhaps to 150.15 over the next week or two. And once again, I don't expect it unless we close today below 158.52. Bottom line, and I'll say it again, we are now in a 2 to 3 week buy signal above 160.49. This was considered an eventuality. We were expecting hesitation in this zone, as you recall. We did not get the downside follow through following the testing of it. We had a bit of a head fake a few days ago, but now we're clearly above it, and I give 171.88 2 to 3 weeks away. So whatever that means to you, if you're just buying long the stock, great. You might have been long the stock from the 120s back in January, or you might have gotten long the stock back in February when we had that 3 to 5 month buy signal. Or maybe you just got long the last day or two or so above this 160.49 level. Doesn't matter to me, but we are expecting 171.88 now, our big picture objective likely to be realized over the next few weeks. Check out wickedstocks.com. Check out that Intel stock pick, that 10-minute video we put out on Thursday. Daily analysis in the Q and the SPY. Please click like and subscribe. I'll be back Sunday afternoon with Monday's Apple Report. You have a great weekend.